General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the work. It's kind of boring with no news. We had FOMC minutes today, but it still wasn't really a significant move. Let's see what they say. Gold, silver went to 49. Penguin stock plunges. Okay, this is a dip. Okay, this is good. Yeah, that's good. It's good for long-term investors. They've been looking for dips. Tomorrow's jobless claims. Let's knock out these charts. This is interesting. Swept both sides of Asia. Pushed up. Surprised it didn't take this low after it. We in uncharted territory again. We haven't had a pullback, so we don't have no new levels yet. This will be the next one. The daily objective is probably up here. Yeah, we going crazy. Broke through the expansion here. Set it on that lunchtime. 2-section up close. Profile. Nothing here was really saying this was going to be a 2-session up close. Besides us not returning. This got smacked. So we started off the week, took out Monday's high, took out Monday's low, then took out Monday's high. So this was the failure swing. Pull a wiggly run, and we took it out here. So let me take this out. So this high is going to be the reference point. The high that took out Monday. This was the week high I marked yesterday. So now we should have a strong high because this is an up candle. Don't need this. We sat on this level here, pushed up. Pretty sure everybody was done by here. Going into tomorrow, only thing I really see is retracement ideas. OTE, 50% is here. Let's get just the candles. Expansion started from this down candle. So 2.87. Retracements here. We can look for sales to go here. I wouldn't want to buy unless we come here. So this is the rules. Sell to here. Under here we can buy back up if we get any kind of signs. I think the sign will be maybe a retest of London. This should hold as a bag. M15. I don't have no M15 bag. I only got higher time frame. So we can see reactions here. This has already been used. This was our retracement area I was looking at. This would have been good to sell. We just plowed through all that. That was the OT zone from yesterday. Fair value starts here. This is probably OTE. Let's see if this lines up. It does. And then the 618 is here. It's paired with this fair value gap. Two, 4, 9, 6, 5. What's that? 6, 9. This is paired with this gap here. And what's this? Thursday unemployment. Okay. So we got our key levels. This should hold if we're bullish. If we close through that, we're officially bearish. This is OTE, the best possible price. And this is 618. So we get over here, we could be cool for buying, but until then, we selling. Let me do this. This. And this. If we open and just start pushing, it's like you're going to feel like you're chasing price. Even if you're selling just a retracement to here. This is the last level that we broke. Let's take off this extension. Let's take off this because we actually have candles here now. We don't got candles here. We'll keep those. Mm-hmm. Sold all-time high. Let's go to the H1. This was previous week's high. Crazy expansion here from here to here. Like if we symmetrical this, like the 618 only works for retracement, but just the if we double this swing, we're at 25,500, which is really really doable. What's crazy is we're not having pullbacks. Like all this is just left. I'm keeping this here because I would love to come get some of this, especially this one. It's inefficient down here. It's not really wishful thinking. It's very possible. It's just far away right now. Our most likely next objective here. Our coldest objective here. Here first, here second. Pretty beautiful. If the government does come cut back on, then this is a back official. I haven't heard nothing about the government cutting back on though, but I haven't checked. Okay, Trump said he ain't finna give y'all no money. Okay, you almost a week. I kind of think they like the government shutdown because what was last time? It was like 32 days for the border wall. And this time it's like I think it's about health care. They don't want to give immigrants health care. Nothing new here. Just our daily. We almost to our daily 618. We finally closed here. So this is accumulation. This is the last high we just took, which I think I already got marked on the other line. But just for this one, we just accumulated all of that. This is accumulation. Now we need manipulation. Let's look at silver. Save this. So we broke here, used it in Asia. We broke here, confirmed. London would have been a retrace here. And TP hit. This level here still serves as a breaker. And this will serve as RTO. I want to see it kind of push up more. But as far as pull back, we got all-time high right here. We're going to need new levels. Hold on. Control Z. Interesting. We stopped at the 718 today, or the 786. Hold up. Probably should have did projections. Oh, we missed it. Failure swing. Perfect. Then this. Hold up. Because this is time. Okay, I'm keeping that. I don't know what that is. It looks like an old projection. I do not like all them decimal points. 57940. This looks great. 50.19155. This the real one right here, the 51618. This 59534. That'll be the swing objective because we're super bullish. Hold on. This is blue, right? Yeah, this is blue. Then the other one's already. Yeah, this one already up here. All right, so we got some targets. Yep, that's it. You can watch here for breakers or just the zone period. Because this is the order block that created, or the breaker that was created in this zone. Those are down candles. These are up. So if we're truly bullish, this breaker should hold. Breakers hold price when we're bullish. We should get a push up or retracement and higher. Oh, snap. Control Z. I would have wanted to buy here. I like buying at the lows, selling above highs. We're at all-time high now. We should get a retracement. But who's to say? Say we should get a retracement. Should is out of control. This is right what I was looking for. The fair value OTE. It's a fair value gap. OTE lines up right here. Buying retracements here makes sense, especially with how it looks. It looks like accumulation, manipulation, distribution. To the daily. It's interesting. Has like a stop hunt vibe to it, but we did close. This previous week's high is still important, but we did close above this. Only thing is we didn't close close enough to sweep this high, and I like this high to be swept. Under here, we could buy under here for the re-break. We can buy under here just because it's a good retracement back to some old prices. Really, you'll want to buy into this down candle. This is completely balanced now, so this should be a key level. That's better. And then let's go here. Euro USD did what it needed to do, but it still didn't give us a reaction like a strong one. Maybe the government shutdown that shut down EU. Europe get news and stuff, so that'll be like the driver for this. See how we broke parent bar low, went to previous month's low, and kind of sat on it. CBDR is doing what it's supposed to do. London close. London close took those low. Go to H1. We need a breaking close above here. Breaking close. Find support. Blase. All that's logical. We finally left this range. And I think this accumulation range is going to be important. We can even go lower because it's not confirmed for us to go higher yet. And we do have sell side liquidity and we have daily consolidation low. Because we need to break this. That's a big consolidation. It's just ugly. I hate seeing the news on the daily. We look at this, just not creating fair value gaps anywhere. Just ugly, tacky. I miss this. Ever since this, what is this? August. Come on, EU. Cut back on. It was expansion day. Sideline, prop, engage, and personal. Just medium confidence day. Kind of one-sided. I expected it to sell. And it pumped all day. Weekday boom. Price came to key level for sales, but no reaction. Nah. Anchor point. Tuesday high of the week was smack today. So we might have Wednesday of the week. One thing to note from, hold on, I'll mix it up. Go to the daily. Just note that Tuesday high was made with the down candle. So anchor point is not confirmed. Yes. Terminus hit today? I don't think so. From C minutes and PM session, but kill zone time theory has been off since we don't have regular scheduled red folder news. Here, on side of delivery, look to buy retracements. Or sell to buy and target 50% of the expansion. Here, no price accumulated. Buy orders. Watch out for the manipulation. Here, hold on, why don't I got the link for this? I will look for a wick of today's high during London and see if I can catch a sale to 50% of this candle range. Silver hit target. Metals and dollar running at the same time, which is crazy. Retracements here. This is more bullish than NASDAQ due to government spending. Can't look for sales here unless we push up and take that high. And we can look for sales to buy up later. Daily here, note the long wick here. That's telling me we should dig lower and retrace tomorrow. I like how we took out the lows, but I'm looking lower for the daily consolidation low. H1 breaking above here. Buying up is logical. I would look for internal range liquidity sweep and then sales to target daily consolidation low. Hold on. That works. Daily con low. Then here. Retracements and lower here. While the dollar retraces. While the dollar retraces higher. Oh, we did record a trade for prop, and today was not a no trade day. I traded on my personal account. The framework play out? No. I was looking for sales, and price just pumped. What did I learn about pattern narrative and myself? Getting used to being okay with leaving the charts and coming back the next day. I used to be right. More than profitable. Now I'm thinking more of managing my funds properly instead of being right, so I can have the money there to take advantage of the good trades. Will I watch for tomorrow? Sales. Big bear. Not the little one. That's that on that. Y'all have a good day. Peace.